Uh, Mr. Kumar, shall we get started? Yeah. I think Mr. Mehta, I think is Chairman Sahib has gone to, I think, see off the government. Yes. So I'm taking a permission to get started in this absence. I don't have to introduce the panel. I think the leading luminaries of Indian banking sector are here, and we'll have Mr. Mehta join shortly. So we'll get started. Meanwhile, there's really so much to discuss. There's so much happening. So many things positive, so many things which are not so great and we need to work on. We have 1 hour, we'll try to do justice to this with the leaders of the industry. It's very rare to have such leaders coming together on the same stage. Mr. Kumar, I'm going to start with you. So we made a big deal in our report and presentation about the need for investment by banks to upgrade their skills. We showed how, on a large number of areas, banks have to invest huge amount of resources, money and talent to really get something done. And you have been thinking about it quite seriously. Some of the initiatives you have taken at State Bank are very, very bold. So I would like you to please talk about, digital transformation. What does it take? How much money does it cost? How many resources you could put in? And, in light of that, what can State Bank do? What can others do? Can everybody do what you are trying to do or not? So what is this nature of digital transformation and what does it imply for the landscape of the banking industry?
That in technology, you need to invest quite heavily if you want to be not ahead of the curve. Being ahead of the curve is a very difficult task. You have to keep pace with what is happening. Investment is required. And the advantage with a large bank is that we have that capability in terms of availability of operating profit or the capability to invest. But in a large organization like ours, we also have to be very mindful that whatever you spend, it should be with a purpose and it should be measurable, the outcome particularly. And that is what particularly for the first time for our flagship program, we draw a notional P&L from the beginning. From day one, how much money we are spending and what is the return on that investment. But I am happy to say that this is one project where within a year we were able to get to it. And it is coming from fresh lending. Our PAPL loan book has already exceeded $1 million, 7,000 crore in 5 months with 0.01% delinquency. So it has given us confidence that the digital channel for lending, it can be a very successful model. And a few more things now, we are working like pre-approved merchant loans, pre-approved business loans. So lending activity is one which can give you good return on this platform. And apart from this, we are measuring the cost efficiency. For example, savings bank account, we open almost daily 80,000 accounts. And now out of that, 30,000 accounts are being opened on this channel, 25 to 30,000 accounts. And the time taken from 40 minutes, it has reduced to 12 minutes. Even in the branch, when it is an assisted approach. So there's a huge saving around. And technology doesn't come easy, and as well as the resources don't come easy. The other issue is around, you said about that, the talent management, and the third thing is buy-in. So buy-in, I have found that it starts from the top. First, the people at the top, they have to be convinced that what we are doing, it is, we should be doing. Second is then how do you percolate down the line within the staff, and then comes the customer. So unless the bankers or my people within the bank, if they are not convinced, they will never be able to convince the customer. In marketing, what I have found that the physical infrastructure comes very handy. So it is an ideal combination if you have a good distribution reach and any campaign we do for you, we do it on digital and we do through our branch channel. And the branch channel support is tremendous. When there is a participation with enthusiasm at the branch channel, we are able to achieve our targets very easily.
So what is your advice to smaller institutions? Do you think they can do the same thing, or we will see difference in landscape?
So everybody has to operate with their scale and their talent and their. If you are a smaller player, then the model will be around niche. Like, for example, what we are doing with you, I don't think it is possible for a smaller bank to do, given the scale of investment, number of people you need. But a smaller bank can still find a niche and develop a product for a particular sector. It's not necessary that you make it so such a application with for all segments. Today, our time is that we make it for all segments, whether it is business, global, agriculture, retail, financial super store, because I have all the subsidiaries there. So you don't have to do that. But still you could have a good application or a good capability. Digital is not only application, it is also about data analytics. So the data which SBI has and a smaller bank have, there will be a difference. But at times, the smaller organization, they can execute better. For larger organizations, execution is sometimes more difficult. And then you have a lot of guidelines around procurement, around all the CVC guidelines. A lot of guidelines have to be followed. But the smaller ones, I think they should operate in a niche. It's very difficult that a smaller player or a smaller bank will be able to do everything like we are doing.
So I take two major points from it as a summary of applications. One, you make a very strong case that digital transformation and digital initiatives are inevitable. We have to do it, whether we are large institution or small, but we always do it with an ROI focus, see where the benefit is coming from and measure it. Second, you are saying that different institutions in India now, for a very long time, we've had most of the banks looking very similar. The time has come, in the next few years, that they will look different, they have to look different, niche strategies have to be adopted. We have talked a lot about differentiated banking, this, that, and that, but we really haven't done much. And so maybe the current trends will force a lot more specialization in the banking landscape, different banking focus, different places, and we'll have different strengths. So thank you very much, Mr. Kumar. Now, may I come to you, Amitabh? Governor talked about the fact that we should have some cheer in the market. Buyer is so growing. Obviously, many of us believe that the worst is behind us when it comes to the book of the banks. And you are one of the leaders in corporate banking. How are you seeing things evolve?
So first, taking a cue from what the governor said, I think we should look at things very positively and create a positive sentiment. Well, there are very clearly data points which seem to indicate that things are tougher than what it appears, when we talk to each other. Most of the industry leading people are saying that they are seeing sales coming down, the working capital sizes are lengthening, the stress in the system is building up. And those times it's very, very important that you be cautious as a banker. So I think on one side we are saying that it is important to be watching out for some of those matrices and be cautious about how you're lending. But at the same time, there are opportunities. There are a lot of business houses, industries who have deleveraged, who are doing quite well. And so kind of, you have both sides available today for you. On one side, you have to be on the lookout for new stresses developing in the system. And because of, I think, more flow of information and a media which is obviously looking for news all the time, you have a stress name appear in the papers every day. So that's one side of it, and bankers really shut lending the moment that kind of news item appears. And on the other side, there are opportunities that exist. So kind of you have to play both the sides, and if you can do it well, obviously you can grow a book on one side and manage your NPLs on the other. But I mean, you have to do it very proactively, and you have to be kind of at it continuously. My concern is that a lot of the institutions will kind of just step back and slow down, which also you're seeing, credit growth is coming down, and they will take the kind of the easier way out. And I don't blame them because it's not just the media, it's not just the NPRs. You have the board, you have the shareholders, you have the regulator who's also kind of asking you all kinds of tough questions. And now other agencies have also got involved. So you have to kind of balance all of that. So my view is kind of giving you both the answers. On one side you have to be careful, on the other side there are opportunities. And during these times when things are tough, I think you should capitalize on opportunities. And I think that's what a lot of the, at least the bigger banks are trying to do. But we're also kind of at the same breath say, no, but we have also be cautious because we have other stakeholders to answer to.
Thank you, Amitabh. I think the one point that I'd like to discuss and get reaction from many people on the panel is, look, retail has been driving the growth for the banking sector for a very long time, and it is slowing down a little. Many bankers believe that SME is the next retail. That will, take us through, that we will be able to show the same growth on SME side. But it is not something that is really working out as well for the banking sector. It looks like the same rules of the game that helped us, do so well in retail are not going to do so well in SME. We need to do something different. Now the NPS can rise very quickly, capabilities required are very different. Zarin, could I actually ask you that question, and then maybe a few other people on the panel? What does it need to do to get? And you have been a commercial banker for a very long time. What does the industry need to do to get the SME or mid-corp lending right, and to avoid? We are noticing that it is not just a demand side issue. Sometimes it's the supply side issue as well. You get high bad debt, bankers stop lending, and then there is a gap.
So Saurabh, we as a bank have been quite active in the SME space, and frankly our experience has been pretty good on this sector. And I think if you look at the whole lending approach to SME, it was more asset-based. I think it needs to slowly move to cash flow-based approach to lending to SME. And thanks to a lot of the data that is available in the system, whether you take GST or you take the ROC, the whole triangulation that you're able to do now is along with the bank statement, like Porphyos, for example, has the GST linked to the bank statement. And you can actually make it more a cash flow based lending. And if there are 2-3 banks and they share the bank statements, it's much more easier to actually do more cash flow based lending. If you look at the contribution of SMEs to GDP, it's about 37-38%. But the bank credit to SMEs is 20%. So clearly that shows that there's a gap in how much more lending can be done. And with all the triangulation of data that is coming, I personally feel that there's a great opportunity for banks to look at. We as a bank have an entity called SC Ventures, and we are setting up an SME platform where it's an ecosystem that is being built. So it's not merely finance, it is also for the SME to access insurance, logistics, tax help, accounting help, and that platform is right now under testing with close user group. We'll be launching in a few weeks, and to my mind that's really one of its kind in India, which is really going to help the SMEs access much more than financial services.
Thank you, Zarin. Mr. Kumar and Amitabh, what is your perspective on this, on SME? Zarin mentioned that, of course, it's a great opportunity. There's a lot of data. We should be able to do it right. But it doesn't always work out. Even with the data, it doesn't always work out. What do you think is going to unlock this opportunity for the Indian banking sector?
Just referring to the slide which you showed, that the NPLs in the SME sector seem to be rising across the board for almost every participant. My concern is that a lot of the growth which you're seeing in SME in specific banks is coming from buying out, you're literally kind of buying out a portfolio or a company from someone else. I don't know how much of additional lending is happening in the sector, and again your data shows that. So by buying specific loans out, you're supporting the SME to the extent that maybe the terms are better or the lending rate is better, but not additional lending is happening. As you also again showed in your slides, the extent to which the banks are using the data to kind of lend to the SMEs can grow dramatically. I think I'm sure initially almost every bank is working on this initiative because they see this as a big opportunity. And I do believe that in the next 2 to 3 years, once the systems are in place, when we are able to connect all the dots, especially getting the data from various sources which might be available, I think the extent of lending, the way we will be lending, the experience which the SMEs and MSMEs will go through will change dramatically. So a huge opportunity, but long way to go. The NPL rates are still very high and they're climbing, especially in this environment. And right now the growth is coming from kind of, just feeding off each other, which is really not great for the long term.
Up to a certain amount, say up to 5, the decision making can be done through algorithms. This is what we are now finding, that the initiative which we took on the public sector banks about a year ago, around PSB 59 or so, where we started from 10 lakh to 1 crore. And now it has been extended to 5 crore. 1 lakh to 5 crore, the SMEs, they can apply online. They get in principle approval. I have given written instructions to my people down the line that there is no accountability as far as the amount sanctioned is concerned, because it is being done through a system, decision engine. They are not accountable if system has said that the person can be given 1 lakh or 10 lakh or 40 lakh. Only thing what they are now supposed to do is, of course, the post-sanction monitoring, documentation, disbursement. The platform should have been very successful, but I think the awareness about it is yet to reach the others. And for loans up to 1 lakh also, we are using now technology. As we speak, e-mudra loan, it is in CUG. We have already done the decision engine or the rule engine. So what I believe is that loans up to 5 crore, they can be easily handled based on the data analytics and putting in a robust rule engine in place. After that, the existing process, which has to be fine-tuned, you will still use data, but the manual judgment, decision making, that will come. And 5 crore, in my view, it's a fairly big amount. That means that it can support the turnover of up to 25 crore. So most of the MSMEs, maybe up to 90%, they can be covered. So this is also essentially nothing different. One is what Zarin is mentioning about the cash flow based lending. The system does analyze the cash flows, and it does analyze through various documents which are given. GST is one of them. For the lower amount, say 1 lakh, 2 lakh, GST may not be relevant, but the rule engine is different for that. When you have GST, you have ITR, you have bank account statements. At the same platform now, we will be using it for housing loans and car loans and other loans. So it can become a very powerful platform. Only thing is the awareness, and second is the turnaround time post-sanction. It will have its own moment. If people see value in it, that they can get the loans quickly and the turnaround time can be reduced further, then automatically they will apply because they will see the benefit. So I think that is the way forward. It is building up, building blocks, or the base is already there. Now we have to build up that momentum and bring more and more MSMEs on that platform.
Thank you very much. It is clear that SME is a very big opportunity, and it's also clear from the answer from most of you on the panel that bankers are betting on using more technology, more analytics, more data to solve this problem, to make SME really the retail of the future. And there again, it reinforces the point that the investment required is pretty significant to really upgrade the skills to really be able to deliver on that. Let me move from SME finance to more personal banking, and I'm going to ask Ashu. Citibank has, for many years, used to be leader in technology, leader in innovation, and for many years, a lot of advances in the ecosystem have, taken advantage of by Citibank to create very cutting-edge propositions. So, Ashu, as you see Indian banking infrastructure, the public infrastructure for Indian banking, with eKYC and then UPI and then now consent-based data transfer, they are going to change the rules of the game and open up a lot of opportunities for all the players to either take space or cede space to non-banks. So it's going to be a pretty serious, competition out there. What's your view as a very innovative institution? How the personal finance and wealth space in India is going to change? That is one space which has not really changed. Payments has changed a little bit. So, what's your view? What's Citibank's view of how you're going to participate in it? How you're going to take advantage of it? And what you request to that?
Thanks, Saurabh. So listen, one, I think it's really exciting to see how dramatically and how fast the whole digital transition is happening in India. And I think the government has been a huge part to really boost forward. And I think the UPI is obviously a great example with NPCI. And what I think has been done in the last 2 years is showed the data is just mind-boggling. And I think obviously all the other enablers in terms of clients wanting to have things the way they wanted, having got used to the Amazons and the Ubers, and then obviously having the cheap internet access, cheaper smartphones. So I think the whole enabling environment and the regulatory environment has been very positive. I think specifically to us, I think the consent-based data sharing framework, and I think the first step is really going to be around the NBFI, account aggregators, and there are like 5 or 6 companies which have a license to do a pilot. And I think there is a lot of proof of concept which they were working on. And I want to try and address this in the short term and the long term where the journey goes. So I think the short term, obviously, we'll see the kind of operating models they come up with. There are clearly seems to be some issues around commercial viability which need to play out, i.e., for example, from what I understand, the data cannot really be stored. Question mark, how much analytics you can do around it. With the banks openly release the data. But the reality is, it obviously, if with the right regulatory framework, then I would hope something like NPCI should get created as a data regulatory body, which can boost this forward. So what it would ultimately, in its true form, give a great choice for clients because of data portability to get better solutions in terms of borrowing, wealth management, even aggregating their accounts in one glance. Now, I think I think this we'll have to see how fast this specific NBFI account aggregator model develops. To me, what is more exciting is that the journey path is very clear. Now, whether you are aspirationally trying to go to where open banking is trying to get to in the UK or in Europe, where ultimately you have a place where data is democratized, and it's not only access to data which matters, it's what you do with the data, with all the data analytics, right? So I think the power from a consumer perspective of what this unleashes in terms of choices is huge. I think for us as banks, there is a great opportunity, but I think there is an imminent danger that if you don't have an ability to really give the clients what they want by being a sophisticated user of data, then I think the presentation you showed is very apt, and I think Mr. Kumar talked about it. Some of us would perhaps succeed in being an integrated provider because we'll be able to retain our customers as well. And others will have to either become a third-party white label supplier to these ecosystems which will grow clients or choose niches. Now, I think the other thing is, I don't think these are mutually exclusive choices. So we are, for example, from a Citi perspective, very much desirous to maintain control of our clients, and therefore investing a lot on the mobile and the technology end of the piece. But also recognizing if we have a huge mass of clients which are outside the Citi system. So we have just now tied up with Paytm to have our white label card because they've got 300 million customers, they're new to credit. Now, of course, we're going to work on algorithms to see how much that works. Similarly, in China, we, along with a lot of other banks, are on the Alipay system to give loans. So I think a lot of this is going to develop. I think the journey is going to be super exciting, but ultimately it should be good for the client.
Thank you, Ashu. Now, there's a very interesting anecdote that 10 years back, the world's largest financial institution by number of customers was Citibank with 200 million customers. Today it is Ant Financial with 1 billion customers. So things are changing quite rapidly. I would like to ask a question to some of you on the panel regarding cards. As I mentioned, when I go to China and talk to my people, my BCG colleagues, they have forgotten how to use cards. There are no cards. And they don't remember when they went to ATM last. This is China, this is not Sweden, this is not Norway, and this happened last 3 years. It is just so much more convenient to take out a mobile phone and make payments everywhere. The cards are finished. What's your view? I mean, all of you are heavily invested in cards. Ashu, you are, Amitabh, you are, Rajnish, you are, everybody is invested in cards. What's your view? How are you starting? Are you starting to think about it, or you feel it's okay for now?
So listen, I'll go first. So one is, I think, again, China is, I think in some ways different, because I think China just had these two dominant ecosystems which just grew so rapidly, and I think the banks never really got a chance to catch up. And I think in some ways, I think the banks in India have a slightly better head start, number one. Number two, I think the UPI explosion actually is just the rails, because people forget there's obviously the bank accounts on both sides, so it's not as if you're taking the banking system out, it's just the rail. Thirdly, I think as you get more financial inclusion, because more people get into the digital or the banking system, I think these people have aspirational needs about credit. I think India, the consumer borrowing story is a secular story. It's not going to get over. And I think what will change perhaps is the form in which credit cards are used. So you may not have a plastic, it may become mobile, but the basic need of a customer to spend and borrow, and the whole lifestyle nature which comes with credit cards today, I mean, you're all kind of attractive. I mean, I'm always looking around at the cashback offers and the reward offers. So I think, we do not see the death of the credit card. Like I said, the form may change, but I think on the substance, because there is a basic client need, and I think we just need to be mindful of that.
So, well, I agree with what Ashu is saying. At the end of the day, I don't think we're seeing death of cards, but you're very right that there are these small and transactional payments of a certain kind will definitely be moved towards, call it the payment platforms or UPI. I mean, you mentioned UPI as a big transformation. But people will travel abroad, people will need cards for some very specific payments. Sometimes they are quite concerned about using some of the payment mechanisms which are available, using a mobile phone, etc., etc. So I think the importance of the cards could reduce over a period of time, but the flow through in terms of the spend will continue to see an increase because it might be used for slightly larger spends. So it is not about the fact that we are worried about cards closing down. I think we have to worry more about what are some of the new payment mechanisms which are coming up, and how do we strategically react to some of these payments and get our rightful share of what is happening there. You very rightly pointed out that others are already taking us out, taking our lunch away in terms of the payment side. Well, they're doing it by spending a lot of money and my mind's we're taking huge losses. At some stage, as some of them have reduced the cashbacks, what we are slightly not sure is that the market share of some of them have fallen dramatically. The moment they've taken the cashback away from the table, the market shares are followed by 10 to 15 absolute percentage points. So the point is that when all this settles down, hopefully one day it will, banks have the infrastructure and the capability to get the share back, because we have an ecosystem level which others don't have. But as you rightly pointed out, they have their own ecosystem, which includes sometimes chat, sometimes other services which the banks don't provide. So the issue is what kind of we provide to our customers, and what dots we are connecting, and what ecosystem we are providing, where it makes sense for the customer to come to us for those payments rather than someone else. So yes, strategically we have to think about it, can't ignore it. But I don't think cards per se will go away. We just have to keep getting more innovative in terms of how those cards can be used. Ashu gave an example, there are virtual cards available now. And so it is as easy to use as anything else. So it's a question of what you find easy to use. And is it a virtual credit card, or it's a UPI, or it's some of these wallets which are available? And how do you kind of replay that game as you go on? And that's what we're looking at.
I'll qualify the question to you on the same lines. I mean, driven by the government, the public sector industry went out and implemented a lot of point-of-sale devices, right? And in light of these new trends, I'm just wondering whether if the entire mitochondria of the banking industry were to be around setting up all the QR codes everywhere, which are very, very low cost compared to, it might actually be a more sustainable thing in light of this question that we're discussing.
Definitely, because putting a POS machine is a very expensive affair, whereas the payment through QR code, it is least expensive in my view. So that is one development. Second is around UPI. And in India, we are more on debit cards, less of credit cards. The differentiation is huge. We have almost 85 to 90 crore debit cards in this country. As against that, the credit card may not be more than 3 crore. I think all banks taken together. So the credit cards also, the issuance is increasing. That is one trend. Debit card also, it is our wish in the State Bank that we eliminate.
Eliminate.
And we can eliminate it because already we have made a beginning through our YONO Cash, where you don't need now card to withdraw cash from ATM or to withdraw cash at POS or to make payment. So already 68,000 YONO Cash points we have established. But the idea is that within a year and a half, it should exceed 1 million. And once we do that and promote it actively, then people will have to think, why do they need a debit card? And if on debit card through UPI, if you can offer the credit also on the purchase, then the question will come that your card in your pocket will be a standby element. That is how this can evolve. And if you're looking at 5 years down the line, the plastic, I believe, will have very minimal space. You will have virtual cards on your mobile. Second is that the transactions can happen without it. So once that happens, why will you need it?
Yes, I mean, that's what I find in China when I go there, that the only place where cards are used are where the other channels are not allowed. Like we go to a high-end hotel, they want to use a credit card because their systems are only attuned to credit card, so they don't take WeChat or whatever. So may I come to you, Mr. Ghosh, now? There's a lot of discussion around all sorts of fancy things that will happen in Indian banking sector. You have a very unique model. You serve a very unique customer segment, the Bharat, as it is sometimes called, rural, semi-urban emphasis. Your traditional business model has been high touch. You can create a joint liability group. You more or less meet all of your customers every week, giving cash, collecting cash, and so on and so forth. And your customers are, the new customers coming into the banking fold. How have you, sir, seen technology changing, affecting your business? Which are the places where you're finding the most meaningful use of technology to help improve your efficiency? And how are your customers changing and adopting? Are they really changing and adopting?
Thank you. Of course, without the technology, bank cannot be run. So every of our customers have the account and they are transacting the electronically. If I going to the three way on that, one is our big segment called the micro banking, next is the general banking and the back office. If I come to the back office of the any bank, everything is happening in electronically transacting on that. If I come to this, the microcredit customers, their transaction happen in a day 20 lakhs and all are electronically happened on them. Any disbursement happen is electronically, their collected, it is electronically. Only problem is there. The bank is not near to their house, so that when they will have to put their cash to their account. So that service we are providing, so that it is showing that the doorstep service to collect the installment only. So that is needed for this level of the people. Otherwise, they are all transactions happening electronically. Second point is there. This is an advantage because we are collecting weekly and going to their household level. So advantage is there. We have the huge, the high touch. High touch has given to us in the early signal of default, and we can manage before not to come as a default on that. This is a big advantage of the high touch model, which I like to continue on that. It is a core matter of that. And our that customer level who are in the rural, in 73% is a rural customer, and they are literacy level also very much the low category, which has that sense you say that 100% of this borrower, which is the 1 crore, are women. So these are more very much comfort with the physical with us. But we are trying to how they can be built up more on that. Next point is coming on that this all are we are given as a business loan, not the consumer loan. So when the business loan is going, so they are purchasing their goods from the wholesale market as a cash. And when their customer is coming to purchase something from that shop, as a grocery shop or vegetable or fish, they are also paying cash. Until that level not change. So these people, how they put the cash on that? So they cannot be like to go to the one account to the another account to transact the money. Coming to the general bank. So we are very focused on that as a new bank. We have now 1,000 branch network. So new bank, we have need to reach to the customer physically to board in the bank. So until my staff will not reach to that customer physically and build up the relationship and trust to each other, so they will not come to the transaction in the bank. So first point is that how we can be like to make them, they will be board in the bank. So in that sense, if you see that now 40 lakhs a customer in my bank branches, all has come because of the physical touch. After the coming to the bank, after few their confidence has built up with the bank, and then we are educating them to use our mobile app, use our internet banking, use our UPI. So they are gradually moving on that. So we see that in the general bank customer now 126% they are mobile transaction happen year-on-year growth in the last year, I will say that. But if it is go to this internet, it is banking and the mobile banking together, it is an 86% year-on-year growth. So that is also moving on that. So until they are, as a new bank, not coming to the bank, so we cannot be educate them to start their transaction with their electronic or on that. I feel that the future is a very big opportunities on that. When the more customer will come to the bank and they are using the mode of the electronic way transaction, that is good. But my feeling I saw that till now India, there is a small transaction they are doing by mobile, not the big transaction. Senior citizen is not very comfortable with their electronic transaction. So this is some challenge on that to educate and then come. I agree on that. Our SBI chairman says that the debit card actually is a cash. It is not in that much of the digital transaction they are using on that. So we would like to future credit card will become, it will be more also used on that. So I hope that the Bandhan bank as a whole is of course it is a more technology used, but customer point of view, if it is a business loan, till now these people are transact more in their level, fill up their money to their account as a cash, but electronically it has been transacted in the back end from their account to our account, it is electronic. So in this way we are doing on that.
Thank you, Mr. Ghosh. I think the asset test for Indian banking industry is digital transmission, when your customers are all using digital mobile-based transactions at point of sale when they are buying a banana from the shop. But what gives me a lot of confidence is when I go to China, keep going back to China, I think there's no other country that we can compare ourselves. But somebody buying 2 bananas from a roadside stall in China happens through mobile-based digital transaction. It doesn't happen through cash anymore. Elder, senior, junior, younger, everything put together. And the thing is, it happens because the suppliers there, they try to promote it. Because they know that if they promote it, the data will come and the data can be used. So I think it is a little bit of the industry, how much you push it, and then the customers will adopt it. So I think that dynamics works out. And if banking industry doesn't do it, non-banks will do it. So I think that's the game that will play out in the next few.
No, you are correct on that. I will give another information on that. We have that the handhold device. There is a nearly 40,000 handhold devices working in our bank. So out of that, the 50% for their installment payment and withdrawal of their savings, and 50% is in other shops, kirana shop or that. So that is also very good transactions.
Let me come, we are running out of time to Mr. Mehta. There as a chairman of IBA. Yes, he will have an answer. And I'll have the heaviest question for him. And the question is, we are not talking about 5 trillion economy, the vision is quite real. What's your, we had a lot of discussion about so many different topics. What's your overall perspective on how prepared is the Indian banking industry towards financing this journey towards 5 trillion economy? What do you think are the roadblocks and how are we going to solve it?
Yes, 5 trillion economy is the dream our country has seen, and we can make it in next 5 years. But it will require a lot of enablement, because right now we must have seen the slowdown in some of these sectors, and the pace of growth in credit is quite low. And to reach the 5 trillion economy level, we need to grow substantially. For example, right now it's 98 lakhs crore of the total credit, and if to become a 5 trillion economy, you need to have 188 crores of credit, then only we will be able to support the 5 trillion economy. That means for the next 5 years, the system need to grow more than 20% each year, and then only that goal can be achieved. Now to achieve that goal, there are a lot of enablers that will be needed. So few things the government has already taken steps. For example, they have come out with affordable housing and the 1.5 lakh additional interest exemption in income tax for housing that will propel the affordable housing growth. The Bharatmala project may propel the logistic growth, and the Sagarmala both they will support the logistic growth. Right now, the government is planning to go for 100 crores of fresh, 100 billion crores of fresh investment into the infrastructure. And if that investment that takes place, that will be a propeller for the growth, because first the public sector investment will take place into the infrastructure, and that will create a demand for various ancillary, suppose for affordable housing. You require hundreds of products other than the cement and steel, and all those things will create a demand for the private sector, so that will propel the growth. The lot of enablers that will be required to achieve this will be, as rightly said, is to improve the credit delivery, is the automation. The digitalization of the credit product, the way 59 minutes Rajnish has said, similar type of automation will improve the turnaround time. The turnaround time will definitely be enabler in the credit growth. Another important factor is capitalization of the bank. So capitalization, for public sector banks, the government has already come out with a 70,000 crore of capital for the current financial year. So that will help them in making some growth in this area. The another important factor is encouraging the private investment. For encouraging the private investment, I think the ministry has already started taking the meetings and taking views of the different sectors. Auto sector, they have discussed with it. They have discussed with the real estate sector, the NBFC sector. So each of these sectoral issues need to be addressed to achieve that 5 trillion goal. And a lot need to be done about it. I think all these bodies have shared their views, and to attain these goals, every segment of the economy will have to work, maybe private sector, maybe public sector, maybe the policy level interventions by the government and reviving these sectors. The regulator today already has assured that yes, the growth is the primary driver that is that they are looking for. So if the regulator, the government and the banking sector and the entire economy push their push together, maybe 6 months down the line, we can see that type of growth will come in the country, and we can achieve that 5 trillion economy.
Thank you very much. I think we have a lot of things to look forward to. I think we have exceeded our time. So I would just like to ask all the panel members, there are some very brief comments, anything that you wanted to say but you did not say because I did not ask the right question. Very briefly if you want to say, otherwise we will stop here. Yes, okay, now, Ashu, anything?
I think you said it, I don't have anything specific. I think you just need to get ready. Like I said, it's a clear and present opportunity, but I think it's also a clear and present danger.
Zarin?
This mic.
I think we've said, I said what I had toward the SME sector. Thanks.
There is electronic transactions, sometimes we talk about it as a reduce the cost. So of course it is reduce the cost, but in the lending point of view, this reducing the cost but increase the NPA. But if you like to go other way, the physical touch with the customer, that will be increase the cost but reduce the NPA. So balance on that both.
Very good reminder that in our pursuit of models, we should not forget the touch with the customer, because that can have just the reverse effect. Thank you very much, everyone. It was a very good discussion. Thank you.